And who you have for your property management company is just so important. Like, you want the communication to be there, you want the understanding to be there, you want the same values to be there, just because then you know that you can trust the other people who are there to take as much care of your property as you would.
Hey everyone, Michael and Susie here with Adventurous Real Estate Investors. Today in this video, we're going to talk to you about a syndication from start to finish. Specifically an apartment syndication.
Yes.
So, what a lot of people don't see is all the work that the operator or the sponsor has to go through in order to get a property under contract. So I'm going to briefly talk to you about everything that goes into before getting it under contract and taking it all the way to closing. And then Susie's going to talk about from closing all the way until sale or disposition. All right, so first off, we're always building relationships with brokers, and we're always networking with owners in the area.
Yes.
So we've had deals come through brokers that we've underwrote and we've closed on, and we've also had deals come through owners that we've also underwrote and closed on. So it's very important that you have your ear to the ground in the market that you've committed to buy in. That's why we solely focus on Oklahoma markets, because we have such a great network build there, and a great property management company and all the vendors that we know there. So if we wanted to move to a different market, we need to build all those great relationships from the ground up again. So that's where we're focused in Oklahoma for the time being. All right, so what does that mean? So building relationships with brokers and owners. So you're constantly talking to them, always chatting with them, always calling them in order to make sure they send you the best deals that they have. So once you get those deals, then you're underwriting them. Underwriting takes quite a bit of time, right? It takes, on average, if you're fully underwriting a property, yes, you can do a quick back in the napkin kind of underwriting and say, hey, does this make sense? Does this deal have legs? Which can take, an hour or two. But truly underwriting a property can take an entire day or multiple days in order to get all the documents and all the information that you need in order to build your underwriting spreadsheet out, right? So you're underwriting a lot of properties, right? Over and over and over again. And then once a deal makes sense that you think your investors are going to enjoy, then you go ahead and submit an LOI. So an LOI stands for Letter of Intent. And so that basically is it's a letter, a formal letter, with the letterhead and et cetera, everything about your company and your partners, and then you submit it to the broker or the owner and basically says, hey, I want to buy this property. The broker then gathers all the LOIs and then they submit them to the owner, and then the owner chooses the strongest team, or sometimes just the highest bidder. But now this begins, once you get your accepted LOI, this sets off a chain reaction of things that can last 60, 90, 120 days, right? It depends on the terms in your letter of intent. Once you have that, the LOI accepted, you have to work towards getting a PSA signed, which is a purchase and sale agreement. So once you have the purchase and sale agreement, the property is officially under contract and you can begin your due diligence process, which can last up to 30 days. Because of the way the market is right now, you see things, 21, 14 days, even 7 or 10 day due diligence period. But during that due diligence phase, you're going to be doing digital due diligence, which is all of the documents that are online that are provided electronically. So you're looking at rent rolls, you're doing a lease audit, you are looking at financials, everything that is kept digitally. That's what you're digging through all those files for the digital due diligence. And then you have the physical due diligence, which is literally on-site, physically there, right? So you're walking every single unit with your property management company. You have a roofer come out, look at the roofs. You have a structural engineer come out if necessary. You have, a plumber, electrician, all come out and take a look at the property, make sure that there are no major hiccups that need to be taken care of. So if the property is still looking good after due diligence, then you continue along the process, right? So then now it's time to find, this is kind of running in the background as well. You're finding the right loan product as the operator. You're finding the right insurance as the operator. There are so many different pieces that go in there, right? You have your real estate attorney, you have your SEC attorney, right? So you work with your SEC attorney to then get all the entities set up for the business. There are typically two LLCs that are set up. We won't get into all those details now. And you also have to get your private placement memorandum, or the PPM, written which is the securities offering to the limited partners or the investors in the deal. So then you have to have, after you have all that set up, you have the webinar to pitch everything to the investors, and then you start raising capital. You raise that capital, and then you can finally relax once that capital is raised, and you can cruise on through to closing. It's a joke because it's not a slow cruise to closing. It is a roller coaster, right? Your lender is going to need things, your insurance is going to need things, your SEC attorney, your real estate attorney, they're all going to be pulling you in multiple different directions through this whole process until you close. And then you think when you close, it's all over, right?
No!
The whole
That's really when everything starts.
Yeah, exactly. That whole thing, the whole operations then begin. Even though you spent the last 4 months with this property, and it's been a busy, and it's been a sleepless, and it maybe even shed a tear every now and then type of 4 months. But now I'm going to let Susie take over what happens after you close on the property.
Right, because once we get to closing, that's when all of the real work begins, because depending on what the business plan is, it could be 3 years, it could be 5 years, it could be 7 years, it could be 10 years, you know, and you have to execute the business plan throughout that entire time. But it's not just, Michael and I executing this business plan. We're also doing it with our property management company. And who you have for your property management company is just so important. Like, you want the communication to be there, you want the understanding to be there, you want the same values to be there, just because then you know that you can trust the other people who are there to take as much care of your property as you would. But so then what else do we do with our property management company throughout this time, right? So we have weekly property management calls, just so that we can talk about everything that's happened the week before. We also communicate with our property management company on a project management software called Asana. So that can be daily, that can be every other day. It really just depends. It can also be thank you. I was going to say multiple times a day. We are communicating with them often, but everything is all in one great space so that communication does not get lost. So what else does this all include after we close, right? So we also do quarterly property visits. And this is just really important to us, one, because we strongly believe it gives a lot of morale for the property management team, but then we can also keep building those relationships that Michael was talking about at the very beginning with those brokers and those owners. So not only are we checking out our properties, we're also continuing to build those relationships and just make them much stronger. But then what do you get, right, as an investor? What do investors get throughout this entire time? You should have monthly investor updates. That should be the minimum amount of communication that you have. You want to know what's happening with the property. You want those updates. You want to know what your money went to, what is happening with it. You want to know that the business plan is being executed. Also, Michael and I like to do quarterly webinars, and that gives just all the investors an opportunity to ask us questions, face-to-face via Zoom. And that's just been really important to us because we think that it adds another layer of almost intimacy to the property and to what we're going on. And we've really just enjoyed that entire process and gotten a lot of great feedback. So what else are we doing, right? Because we need to make sure that the market is still in a really stable place. We need to know if it's growing or if it's plummeting. We got a little bit of problems, but we just have to know if that means that our rents are at the right spot, if they're not at the right spot, what other properties are doing, what the whole what's happening to the economy as a whole. And then once we get further into our business plan, that's really what helps us determine if it's time to sell. But before we even talk about selling, right? Because it's hey, well, where does payment come in with all of this? Investors receive quarterly distributions, and whether that property has a preferred return or if they're just getting monthly cash flow, majority of the time you will see quarterly distributions, and that's when you will get paid. Another time that you will get paid is through the refinance or the sale of the property. And you're wait a second, we're almost to the end. Is that really it? So although it is condensed, a lot of love and time goes into these properties because we're not just in it for the investors and the profit. We are in it to create great communities with the residents. And that's one of the most important parts of all of this, is that throughout the entire business plan, we are thinking about the residents and what is good for them and what is good for the community. But then as we come to a close, the very final thing that we do is an entity closeout, just so that all the paperwork is done, all of our vendors have been paid, all of you, the amazing investors, have been paid, and that we know that we sold to another real estate syndicator, operator, that we know that they will do really good things with the property as well, right? Because that's what we want to continue, is just placing great operators with also great operators, just so that the chain of effect can ripple and ripple and ripple and ripple.
Yeah. Absolutely, absolutely. So I know that was very brief through a process that takes years and years and years, but I hope it does help shed some light on the process before closing on a property, in this case an apartment, and then everything that occurs from closing through, operations of the property, and then entity closeout at the end. So anyways, if you have any more questions, please feel free to drop those questions in the comments below. We'll be sure to address all the questions or comments that you have. And if you found value in this video, smash that like button below, please. And of course, if you like the content that we put out, please subscribe to our channel here and ring that bell so you'll be notified when we release cool videos like this. All right, so thank you so much for your time and attention. Until next time, explore more, adventure awaits.